Hello, 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 hello. Good evening, good afternoon, good morning. Wherever you're watching from, welcome to Stock Market Technical Analysis Daily on Friday, December the 18th, 2020. Who do we have in the live chats? Hello, Mr. Beautiful Gates. Good morning. Giancarlo. Where's Giancarlo? Where are you catching us from, sir? I'm assuming Giancarlo will be a sir. Hello, Miss Marcy. Could somebody confirm the quality of the sound? And we will be off and running on here for this another day of the US equity markets and another opportunity for us to take a look at what the market has in store for us. So let's see. I am making sure that we are all squared with everything. All right. Okay, so what a week, what the last, how many, 5 trading sessions that we have had. So I don't even know if a recap or whatever. Thank you, Miss Marcy, about some confirming the quality of the sound. So last Friday it was a series of Qualcomm, JDs, and the likes. Then Tuesday Apple, and then Wednesday. What were we trading on Wednesday? IQ. All right. How can I forget 37 bagger? Then yesterday. IQ continuation, but yesterday at this time we were looking at some Roku gapping, and I believe the trade, our Gangsta trade worked perfectly. Granted, it didn't give 10 bagger, but hey, folks, let's be real, right? I'm gonna repeat which that I said yesterday. Come for the 10 bagger and stay for lifetime knowledge and memories. Yeah. So the 10 baggers, they are just a byproduct of learning how to trade stock and options. So it's not something that we have an obsession over. If you do, you may want to check yourself before you wreck yourself. Oh, my pastor used to say that. Check yourself before you wreck yourself. All right. So we say hello to Old School in the Money. Is that the name? I think I spoke with Old School in the Money first on our YouTube. Yes, I do encourage people to ask questions on our YouTube video when you do them as feedback. We definitely appreciate feedback, good and bad. Yeah, we are not afraid. That's the only way to improve, right? So if there is something that I can do within my power that I can do, I will oblige. So I think, it's Old School must have been looking for our Discord room. And at first I was like, it wasn't that difficult to find our Discord room. A lot of people, it's not straightforward, but our Discord room can be fun. If you don't find our Discord room by yourself, that means you are not looking hard enough. Hello, Mr. Donny. Glad to have you guys. All right, so yes. So when is it Friday and today is expiration day, so the so-called quadruple wish, meaning you expect a lot of funny things. So we have daily expiration for day trading, obviously, weekly, today is Friday, monthly, and then quarterly as well. So it's anybody guess. At the end of the day, we know it's called quadruple witch because the market makers that are winning. Yeah, they have numerous ways of winning. One of the ways that they have of winning, if the stock don't move, option traders lose money. The stock traders, those people who trade stock, that's the one of the advantage, right? Time is not a problem. I can have a position on a stock and just wait it out forever. Yeah, I can wait 6 months, 1 year, and then down the road I say, look at me, I look like a genius. I shorted that thing 6 months ago, and boy, I didn't cover until. So you can say that. The drawback, or the drawback, it's not a drawback. The difference between stock and option is that option, they provide a leverage. First of all, for entry, there is very little barrier to entry to say, oh, I need thousands of dollars to start trading option. You can trade options this week. Apple, if you had 6 cents, well, 6 cents is per contract. So I think well, there was seven. If you had $7 this week, you would have transformed $7 into $100. Yeah, so that was a 20 over a 20 bagger. um so that's the beauty of option trading. Whereas with your $7, there are very few stock that you could buy. I mean, you could get lucky with a penny stock, but in the case of Apple, if you have $7 and you want to trade Apple stock, well, there are partial shares now that are from Weibo. That's a new thing. But even then, I mean, seven, it will take you quite some time for Apple to appreciate to get somewhere. But it's a start, right? Whereas with option, $7, you could have turned that on Apple options that we were trading, by the way, on our subscription trade alert system. So that's what's one of the main advantages of trading option. But the risk, the drawback on the other end is that as time passes by, and that's where I was going with the quadruple witching. You saw yesterday the market wasn't moving that much, yeah. And we have something we call the trading clock on here that we teach, meaning starting at 11 Eastern, if your position is not going anywhere, or even if it's going somewhere, you have profit, you may want to start considering taking partial profit or ensuring how you are going to negotiate the time between 11 Eastern and 2:30 Eastern. Always. That's a fundamental of option trading. If you don't know that, you will always be wondering, how come my position are always losing money in the afternoon? That's what happens. Yeah, that's that famous sideways on there. So, what do we have in store today? Obviously, I mean, since if you have been trading, let's say the likes of I think it was even Baidu. I forgot Baidu on Tuesday. So Baidu, the likes of IQ, or even Roku yesterday, those stocks have had momentum. So we have talked about day one, day two, day three momentum. Remember yesterday I started this very conversation, this stock market technical analysis. We started it by showing a chart of I believe it was IQ with a big red candle that took place on Wednesday. So let's go ahead, and actually it's so nice to be able to illustrate something like this, right? So this is Roku on here, but if I go to IQ and I go to the daily chart and I make sure that I set it up such that you guys can see it with my screen resolution. Yeah, can we show that this is IQ? Yep, we can confirm that this is IQ. So this is what happened. I think, was it Beautiful Gates yesterday who was telling us that he had the 18 puts? They went deep in the money yesterday. I mean, the stock touch, what was the low of the day yesterday? 1700. This is a stock that was worth $22.75 3 days ago. This is the very embodiment, one of the best illustration of momentum. Again, momentum doesn't mean bullish, yeah? Momentum meaning it can be in either direction, meaning that a substantial move that has followers, that has traders following that. So this is where IQ is trading as of now. Well, is that in this type of scenario, the question then is, how low can you go? Well, when we are doing technical analysis, the saying is usually look to the left. Yeah, because the left side of the chart, the right side of the chart is the future. The left hand side of the chart is the past. It will tell us support, resistance, and of the like. So where is IQ? Where is one of its potential destination here? All right. I mean, my eye 16, obviously, I mean, if it dropped below 17, 16, but here we see a low here in May of $15.30. All right. I'm not sure if this candle, it's, let's say you guys cannot see that candle. Here's a candle as of, according to TradingView, this candle, April 7, 2020, a low of $14.51. Yeah, that's momentum right there. Okay. So, Okay, so in terms of the overall markets, the overall US equities, so let's take a look on here. Let's go through SPY, QQQ, and IWM. I keep forgetting. Well, not that I'm forgetting IWM. Why do I not make IWM as important as SPY or QQQ? So here's IWM. This is SPY. The full week we have been posting higher highs so far this week. Yeah, we are above the yellow exponential moving average 8 period. That has been the case since when? Since, let's say, the early part of November, early November. I mean, we have had some sideways here. Not every day has been green, but in terms of, I'm talking about this recent sequence here this week. Yeah, we posted a low of last Friday. The low was 363, so 10 points within a week. In a week thereabouts. Yeah, yesterday we didn't quite go to 373, but you get the idea. So the trend has been bullish for the overall market through SPY. QQQ, same thing. Yesterday we were talking about a new series of look at these green candles, just higher highs. Yeah. QQQ is not waiting for anything. So we are starting at 311.75 today. Is this a stretch to see 315? Maybe. Yeah, believe it or not. I mean, again, what do market makers they took a look at? What is the best way for them for a stock to move in order for them to make money? Meaning that if a lot of people are taking are buying puts, let's say for hedging, for instance, buy QQQ or whatever underlying stock that has that property going up, the market maker will benefit from that. And the best way to show it, we are going to go inside of Power E-Trade. I'm going to just this comparison. We are going to take, I'm not sure QQQ. I observed it the other day for SPY. So we're going to do both SPY and QQQ. So we're going to look, yes, obviously the option market is not open right now, but as of yesterday, we are going to say, okay, from the closing price, we are going to look at maybe $5 up, $5 down, or how many dollars up, and compare the premium. Do they cost the same? This week was a prime example of that. Puts were way, way more expensive than calls. In which case, if that's the case, right, meaning people will buy puts. Market makers, they will see the volume and the open interest for all the contracts. Yeah. Therefore, if the market is pushed into a direction that will make market makers, because they're the ones selling the option contract, then that will be advantageous to them. So sometimes we look at a stock to say, oh, why is it going up? Well, the people who control these markets, they know what they're doing. So, and for us, we take advantage of that and in either direction. So that's why sometimes I don't like the word manipulation, because when we are making money in a position as a result of something like that, we cannot just say, oh, the market's manipulated all the time when we are losing and when we are making money. So hence, I try to stay away from the world market. The market. Yeah, we know the market's manipulated. That's why we have tools like Flow Algo, because we want to see where the big sharks they are putting the money. For those who are new here, we have a blog, successfultradings.com, where that's how we started. The blogs is the one that's a fuel into this YouTube channel now. So where we explain the merits of Flow Algo, and recently we have been doing a comparison of that Flow Algo tool to other recent tools such as Trader Flow or Black Box that exist. Those tools are to help us retail traders understand somehow where big money is flowing into and trade accordingly. All right, as we are literally 2 minutes to 6 a.m. Eastern time in New York and in Montreal. Hello, if you're catching this broadcast from Montreal, it is currently, we're approaching 6 No, that will be 6. That will be 2 minutes to 6 Pacific time. Yeah, 6 Pacific time will mean 9 a.m. in New York and in Toronto. So approaching 9 p.m. in Singapore City as well. So we say hello to Mr. Craig, who just joined the chat room. Festus, good morning to you. All right. So what we like to do here after we take a look at, did we take a look at everything? No, we didn't take a look at IWM. Again, here's IWM. I'm not sure how many times I have to say it. It has been the strongest of the ETF lately. Right now, printing 196.40. Will they? Because they like round numbers. So will they give it a shot for 200 today? It hasn't been straightforward to trade. A little bit more recently because it has had weeks here where it has been flat. So always, for us in technical analysis, we always take a look at multiple time frame, right? To trying to see, well, I mean, look at this. The last 5 weeks, in average, the ATR here, in average on a given week, 183, about 5 points. If you cut the low, even better, 8 points on here on this week. This other week here, 188 to 192, 4 points. And on the current week, the low was 189, let's say 190. And we are currently printing 196, so 6 points thereabouts. So actually, this is one of the best stretch of IWM that I've seen all year long. In March time frame, yeah, we were able to take advantage of the entire market was recovering big time, right? So that's what this blue, that was our strategy on there. We had some 10 burgers on this one. You can go back. We have videos on YouTube too that we share what we were doing there. But recently, this has been really, really bullish. I mean, this is the weekly chart, and this thing, this ETF is trading outside of the weekly Bollinger Band. That's, I mean, when was the last time that was the case? A little bit here in November of 2019. But other than that, it hasn't. Okay, actually, yeah, this is the last time. Okay, this maybe seasonality here because now we can record that last November, between November 18 and 16 of December, the same week, IWM actually was riding, and not as strong as right now, was riding the upper Bollinger Band. That's interesting, and that was the last time because prior to that, we have always been trading either below the moving average, obviously, with the sharp drop in February, March, and now recently here. Wow. Okay. So it would have paid to study seasonality on IWM. Maybe that's a subject of a quant research analysis that we may partake in another day. All right. Okay. So we took a look at the ETF. Let's move into the screener. I mean, but by now, if it's Friday, if you have been here with us, you should have your stock of interest that's it's gapping in the pre-market, right? So what is everybody? Could you put your stock of interest that you circle in pre-market that's moving? We've talked about Virgin Galactica. Oh my goodness, Virgin Galactica. I think was it on Monday? We were doing a top 10, or Tuesday. We were doing a top 10 of the most volatile stock that we have seen recently on here. Yeah, here's Virgin Galactica SPSC. I call it sometimes spicy. I don't know why. I don't know why. Yeah. So you wake up on a Friday morning and you had to blink twice. I'm not sure. Is this correct? Maybe it's not correct. Okay, so I just refreshed. So because sometimes some of these platforms, you look at the price, you're like, that cannot be true. You cannot be serious. Yeah, they're serious. So Virgin Galactic Holdings, minus 8% on a Friday. Congratulations if you have puts on this one, because that's just other than that one on the bearish side. Who do we have here? The one and only Fedex. We talk about Fedex if you were with us. I need to stop saying that, because if this is your first time you're with us, okay, this is the first time you're hearing about Fedex. We have known all along that Fedex will be having earnings on Thursday after market close. So for us, we premeditated this. I think if, let's say, I had a one-on-one yesterday, if that person is on on the live. That trader is on the live chat. They can attest of that. We actually studied it yesterday. Yeah, we studied that we're gonna share on here, because for us, we do not take chances, and I'm going to show you why for Fedex, because I'm going to show you when we jump inside of Power E-Trade, we don't take chances before earnings. But after earnings are released, we have a unique mechanism by which we go about trading confidently, and for the most part being successful at it, making money on it. So Fedex is down minus 2.8% at 284. Okay, fine. If let's say you gamble it on before earnings by even, because people could say, hey, well, let's think about this. We don't know where the stock is going before earnings, but what if I take a strangle? I take both and call. You can still lose. Yeah, and this is an example today. So typically, here's a rule of thumb. It depends on stock. That's why this is really more so for the big price stock. Let's say, I don't know, $50 and above. If you strangle something, it depends how far out of the money you go, right? If you strangle a position before earnings, I'm going to show you a variable that will help you assess that if you want to partake into that type of adrenaline boosting exercise. That's what it is. That's an adrenaline rush. Oh, let me. Most traders, even you will tell them, say, oh, are you playing Fedex earning? Are you playing Apple earnings? Oh, yeah, they are playing. I mean, playing. Trading is not playing. Yeah. So when I heard somebody use such verbiage, that tells me pretty much they take under. But back to what the market makers they will do, we will show it in the next few minutes here. The implied volatility is jacked up before earnings, such that the stock really needs to make a substantial move. And by my experience, the minimum that you need to see, it will depend really. It's at least 6% in either direction in order for you to. But then imagine you put $100 on both directions, right? Only one direction is making money. Let's say it makes 100%. You lose everything on the other one. At the end of the day, you are even at best. But you meaning that, yeah, buying a strangle as a method to trade pre-earnings is not a standalone efficient way of making money. You will lose more time than other. You will get lucky. Trust me, don't get me wrong. You will get lucky. You do it enough. You will have one of those outliers, we call them, and one outlier could yield you enough money for you to say, oh, this strategy is sustainable, but really it is not. I guarantee, because market makers, otherwise they will lose money in this game. If we call this game of trading, market makers, they own, especially option trading, they own the playground, right? They win over 66% of the time. That's what takes place. So for us, we're going to take a look at Fedex. What's going to help us trade Fedex today? None other than our very own quantitative analysis, earning quantitative analysis. What is this document? The document I'm sharing with you is something that we have. what am I about to say? What have we done on it? Well, we have had we have provided this document to some of our traders. If you attended our bootcamp September 7th, you have access to this document because it was part of the package or the offer, if you will, for the bootcamp. For the rest of you, if you would like to get hands on this document, it's for purchase. Fedex Corporation. So what are we showing here? We are showing the history. Again, history does not guarantee that because something happened in the past, it will happen in the future. That's very important. But the whole premise of quantitative analysis is to see how have things gone, and stock, believe it or not, they tend to repeat. Things tend to repeat themselves. At what rate? If you ask me, hey, Fedex, what's the probability of something? Most of the time, I would say 66% of the time. So 2 times out of 3. That's what we have seen. So hence, so meaning that by studying the past is giving you an edge to predicting the future. That's not bad at all. So 2 out of 3 times, if you are able to do something and get a positive outcome, for me, that's fantastic. Yeah. So On Fedex on here, the study show actually for all the stock on here, we have about 80 stocks. And if you have a stock that we don't have because there have been recently introduced stock that's hey, they have been behaving to the point where they are tradable, we can include your stock and do the analysis for you. So write to us, go onto our website, successfultradings.com. We can generate this study for any stock that you give us. So for Fedex on here, what are the first three columns? The first three columns, they show us after earnings, how does Fedex usually behave day one, day two, day three. This is on the call side, meaning we are looking at the distance between the opening price and the high on that day. So day one is today. All right, because yesterday was day zero, if you will, after market close. That's what AMC stand for. Yeah. And this is on the put side. Excuse me, let me drink something. Wow. Let me drink. On the put side, we're measuring the distance between the open and the low. So I see some reddish here. So 1, 2, 3, 4, 5, 6, 7. And I see some green here as well. 1, 2, 3, 4, 5. So meaning Fedex has a history of moving. There's potential of it moving after earnings. That's all I need to look at. That's the value number one of this document to say, oh, so there's, let's say for instance, back in March, Fedex moved 11% on the first day. That's fantastic. 11%. Wow, that's that's definitely. Oh, especially we are Friday today. So for us, we are going to come and say, okay, we're trading Fedex expiring, let's say today, to just take advantage of this one day. Then we can set up things at the end of the day for or day two, which will be Monday, day three, which will be next Tuesday. Oh, by the way, next Tuesday is a short week, folks, right? So for our subscribers who already have the watch list for next week, expiration is on December the 24th. Because Friday is Christmas. Next Friday is Christmas. Oh my goodness. Wow. So yeah, so we will have a short week. My experience with short week, folks, the stock market actually move even. We have seen short week on here. Even this week, you can go back and do your research where we have a short week, let's say in observance of Independence Day or whatever other holiday. The market still moves. So maybe December may be different, but we will be still trading out of the money contract. We will adjust from the fact that, hey, we have one trading day, meaning Wednesday, it's like the cut-off day, if you will. Going into Thursday, we know that we will adjust our risk accordingly. The one thing that I want to highlight on here, so definitely FedEx has a history of moving. So fantastic. For us who trade Gangsta Trade, fantastic, fabulous. We can take advantage of that. But also we can try to, the history here give us a measure by which, and a potential bias. How do I do this? So I want to look, we are in December, so I want to go back and look at past year earnings of FedEx in December. Has it had a tendency to move into a specific direction? So minus 2.3 here in December 19, 2017. December 2018, minus 3.97. And last December, minus 3.39. Yeah. The facts are in front of your very eyes. So that's what the quant analysis say, meaning that we are expecting maybe 3% move down from the opening price, because this is from the open to the low. So in December, in the previous December, from the open to the high, 0.25. 1.42, which is lower than this one, meaning actually something like this happening. This is perfect for Gangsta Trade. Think about it, folks. Let me know. Think about it for a second. Why would you want actually this? Let's say FedEx does something like this. It first goes a little bit up before posting this bigger low number. And last December, 0.89 versus minus 3.4. Armed with this knowledge, I can dive into Power E-Trade and I can figure out the strike price, potential strike price that I can use for my chocolate Gangsta Trade. I'm going to pause for a minute, most likely take a look at questions. This is how we use this earning quantitative analysis document, and you can do that. We have used it in the past on here quite well. Wow. Why? Thank you, folks. We have 20 concurrent viewers, 30 playback, and 5 likes. Okay. Wow. We have a comment on here in the live chat. My calculation is if the cost of the strangle divided by the share price in percentage is less than the percentage expected move based on the last 4 quarters of earning movement. Okay, so that's a comment from Mr. Matthew. I'm not sure I'm catching everything, but you can definitely check that method on there. So market makers, they know, trust me, they know how to make money even if you take a strangle. Though that you will have outliers. We recognize that. We have been witness of that on here. So a stock making a 10% move, for instance, I think the last one I can think of, was it August the 25th? I was looking at it with somebody recently. We all make great money. Mr. Wayne was, you can see his 18 bagger on CRM with a trade that we took before earnings. But that was a unique circumstances. It was a unique set of circumstances, if you remember our reason for taking that trade. All right, let's go and quickly go into Power E-Trade. Let's take a look at what can we do. So remember the numbers, right? I showed you everything that we're going to do here in picking the strike on Fedex is based onto that document. That's earning quant analysis document that you can get your hand on today if you so like. Okay. All right. So very quickly on here, just to take a look at where the markets are. So what's SPY doing? SPY is flat, relatively flat. I'm not sure. Does SPY has ex-dividend today? I used to have that there because that could be the reason why it's showing minus 1.25. I'm not exactly so sure. QQQ, it's up slightly, and VXX is up slightly. Yesterday was like that, and then VXX became negative. I told you one of those two were lying, right? So typically they cannot sustain both SPY and VXX being green. That's will defeat the purpose of that fee index. All right, regular stocks very quickly on here. The no volume winner today is CNX. XCENX, congratulations, no volume, fantastic. Great volume, high volume, it's SPCE. So SPCE is a candidate for Gangsta, folks. It's gapping, well, earlier we saw that it was at minus 9%, now minus 7.18. I think SPCE started the week with a gap as well. So that's what prompted us into getting that top 10 of most volatile stock. Its cousin, you can see it here, NEO is another volatile stock. This morning, actually, it has been very subdued. And the one and only Tesla currently printing 671. Okay, are we December 21st yet? Oh, December 21st, folks. That means come Monday, Tesla will be in the SPX. All right, so this is what they have that they had to show for you. Just 15 points on a Friday. Yeah, no biggie. No biggie. Apple has some volume. Citibank has volume. Is this true? If Citibank has this much volume and then it hasn't moved at all, that's interesting on there. And then SPY and QQQ. If we sort by individual stock that moving, so SPC, Fedex, obviously. And okay, so the current price for Fedex is $284. Let's run it up as such. Yeah, 200. And we said the move from a quant analysis is typically 3%, at least 3%. So let's round it up to say 10 points. So that gives us in both directions potential strike price on there. We are going to do chocolate vanilla. So I'm going to go to my option chain. If the word chocolate vanilla doesn't mean anything to you, trust me, ask Mr. Craig. Then maybe he can get you into strawberry vanilla. Strawberry Gangsta. So strawberry vanilla. We have vanilla Gangsta. We have chocolate Gangsta. Officially. Unofficially, Mr. Craig has also strawberry Gangsta. I think I know what strawberry Gangsta is because yesterday in my one-on-one coaching, a trader actually showed me a version that mixes both, believe it or not. And there's nothing wrong with that. They actually made money on, as all of us we did on Roku puts. Okay, so we're saying 10 points thereabout here. We are just rounding it up, folks. Right? So 10 points from here. That's let's say the closest round number for us going to be 295 on the call side. So these calls, folks, look at this. This is the most important thing that you are taking knowledge or learning opportunity that you had this morning. You see this implied volatility? Let me bring the what we call implied volatility constellation here inside of Power E-Trade. This is telling us implied volatility, basically, let's put this in layman terms because I don't want to get into the technicality of stuff. The higher the implied volatility, the more expensive the options are. So what market makers do, they increase implied volatility because the reasoning is uncertainty. We don't know what's going to happen. So though some of them, they may have a good idea. So the implied volatility is increased. So this is it here, the current implied volatility in solid line. And this is the 30-day average. Anytime you see something like this, you know you are buying very expensive premium for option. You are paying a high premium for option. So what's going to happen immediately in the next 12 minutes when the market open? It's going to be reducing. All of these 100 numbers that you see here, they are going to be much lower. And then the implied volatility change in this column will become, it will be a negative value. That's what happens. So that's how market makers are able to consistently make money from, take advantage of that. So for us, let's say we are looking at the 295, 300. Yeah, let's just take those two. So 290, what did we say? 295 calls, 300 calls, 305 calls. And our offer on them is going to be anything between 5 cents and 10 cents. Yeah. But we have an extra piece of information, actually the most valuable piece of information. In the past, we have seen that the bias, if you will, has been on the put side in December earnings for Fedex. Yeah, so meaning that will be our so-called bias. We don't have a bias, obviously, because we are buying both sides. That's what a Gangsta Trade is. So 10 points are here for us. I mean, 10 points, 275 thereabouts. So we can then go 275 puts, 270, and what else? 265. So 265, 270, 275. And we want to get those for 10, because this since the stock is gapping down, these are the ones that are going to appreciate a little bit. But don't worry about the current price of 90 cents because look at the implied volatility was super high. So we are targeting that range using the chocolate Gangsta technique. I mean, anything, obviously, if we put in our order for, let's say, 10, 15 cents and we don't get that, the moment that it open live, we will see the current price that's on there, and you can make an entry, obviously, from that. You can adjust your order, your initial order that we are putting in before the markets open. So that's really. Oh, last thing I didn't do. So for Fedex here, just recap. So on the call side, 295, 300, 305 calls, and on the put side, 265, 270, 275 puts, and the quant analysis is saying the bias is on the put side, meaning that it has a potential of moving further down by 3%. We have seen 3.3% of so forth over the last 3 December timeframe. All right. What else before we depart? I want you to just showcase on SPY how, I don't know, you call it in balance or what. So 371, we wanted to take a look at, let's say, if we say, so we closed yesterday at 372. So the price here reflects a closing at 372. So if we take, let's say, 3 points up and down, let's see, compare the premium cost of those options. So 3 points down here puts us at, let's say, 369. So the 369 yesterday puts were going for 86 cents. Yeah, so I'm just taking the bid price, 86 cents. I would like to compare them to 3 points away on the other direction. 3 points away thereabout will put, say, let's say 375 calls expiring today. Okay, folks, it's night and day. Okay, I'm sorry that I'm going too fast on it, but if you understand this concept, let me again take 1 minute, just 1 minute. It's currently 6:23, and we're going to give you 5 minutes to put in your Gangsta Trade. So we compare yesterday at close, right? The stock closed at 372.24. So we were comparing, we add 3 points to the price, the closing price. That gives us 375, 369. The put, the 369 put cost 86 cents. The calls cost 22 cents. Almost 4 times more expensive the puts were. This is how the market makers, you need to be aware of this. So meaning, which direction do you think that they were more likely to get the stock to go in? If people bought a lot of puts more expensive, by them pushing the stock up, those puts will lose money and the market maker will cash much more money. I saw this all of this week as I was because those are the type of thing I measure regarding what the market maker are doing. So this is witchcraft at its best. So I'll leave you with that thought and have a great trading session, everybody. Thank you for the likes, by the way. We enjoy the likes. Get tank, we G tank or whatever. We do not have time to do anything on here today. Really, I apologize. I'm just looking at the screen as of now. Have a great trading session, everybody. Bye bye. Have a great weekend.